There's this massive investment boom happening in the US right now, and honestly, the reasons behind it might surprise you. It's like someone just flipped a switch on a supercharged capital machine. So, what's fueling this thing? Let's dive in and break it all down.
All right, so just how big are we talking here? To really get a grip on the scale of this thing, you've got to look at the numbers. And I'm telling you, they are, well, they're pretty eye-popping.
Let's just start with this one number, $70 billion. I mean, just let that sink in for a second. It's a huge figure. What do you think that could possibly be? That is the amount that just one company, Pfizer, plans to pour into its US manufacturing. That's a massive vote of confidence for sure, but really it's just the tip of the iceberg. And get this, Pfizer is not flying solo here. Just look at this list of pledges from all sorts of different industries. You've got car companies like Stellantis and Hyundai pouring billions in, probably for all the new EV and battery factories, right? And then you have the tech titans. I mean, IBM and the super important chipmaker, Taiwan Semiconductor, are pledging hundreds of billions. This is not just a couple of companies making moves. No, this is a huge economy-wide wave. Okay, so that leads us to the big question, why? Why is all this money, all this capital, flooding into the US right now of all times? Well, it seems to boil down to a powerful combination of three key factors. The first big driver, it's all about government policy. Yep, a 1-2 punch of new tariffs and some pretty significant tax laws has completely changed the game for businesses trying to decide where to build and where to invest their money. The logic behind the whole tariff strategy is actually pretty simple when you break it down. You put tariffs on goods coming into the US, right? So if you're a company that wants to sell to American consumers, you suddenly have a choice. You can either pay that extra tax, or you can just build your factories here and avoid it altogether. It's a pretty powerful incentive to invest domestically. And President Trump couldn't have put it more bluntly when he was at the Taiwan Semiconductor announcement. The logic is crystal clear. Build your factory here, and you don't have to worry about tariffs. Simple as that. You can see how that kind of direct appeal could really sway a $100 billion decision. But tariffs are only one side of the policy coin. There's also new tax legislation that's specifically designed to light a fire under domestic investment and innovation. And the effect is pretty clear. I mean, you've got the CEO of Johnson & Johnson directly connecting his company's big investment plans to this new law. He's talking about things like lower corporate taxes and special R&D credits, which are basically tax breaks for spending money on research. It just goes to show you how powerful these policy levers can really be. So we've got these policy incentives pushing things along, but the second driver is something a bit more fundamental and maybe, just maybe even more powerful, the rise of artificial intelligence. And to get a sense of the sheer scale here, the CEO of NVIDIA, a company right at the heart of the AI boom, estimates that somewhere between $3 and $4 trillion will be spent on AI infrastructure by the end of this decade. That is just a staggering amount of investment. And guess what? A huge chunk of it is happening right here in the US. So why the US? Why is it the epicenter of this whole thing? Well, it's really a perfect storm of advantages. You've got the dominant tech companies, the most advanced AI models and computer chips, a nonstop pipeline of top talent coming out of American universities, and an innovation culture that just moves at lightning speed. Now for our third major driver, which is less about policy or tech and more about people. It's about the American consumer. Christine Lagarde, who heads up the European Central Bank, she really just nailed it with this quote. Her point captures a fundamental economic truth. There is simply no other consumer market on the planet with the raw spending power of the one in the US. And this is a really key difference when you start comparing habits across the globe. Consumers in places like Europe and China, they tend to be a bit more cautious, a bit more likely to save their money. But Americans, well, there's a real culture of consumption. And that reliable, absolutely massive engine of spending is precisely why foreign companies, everyone from Lego to Honda, find it so appealing to build their factories right here, as close as they can get to their biggest customers. Okay, so let's recap. We've got three really powerful drivers: government policy, the AI revolution, and that unstoppable consumer demand. But the question is all this talk actually translating into real, measurable investment? Well, the data says, oh yeah. Now, to see the proof, we need to quickly understand a key term, capital expenditures, or CapEx for short. This is basically the real money companies are spending on the ground to build and improve their businesses. We're talking factories, equipment, technology. It's the clearest signal you can get of actual investment happening. And the numbers are pretty incredible. When you compare the first half of 2025 to the same period in 2024, CapEx is up almost 15%. Now, to put that in perspective, if you take out the weird numbers from the pandemic, that is the single biggest jump in business investment we've seen since 2011. That's what we mean when we say a supercharged boom. You can literally see it in the data.
So when you put it all together, the smart policy, the revolution in AI, and the world's most powerful consumer, what you get is this uniquely powerful magnet for capital. And the argument here is that this isn't some temporary blip. No, this is looking like a long-term, really durable trend.
But let's be real. No boom goes on forever without hitting some turbulence, right? This explosive growth in AI, it needs a truly staggering amount of energy. And, those concerns about the national debt, they're always there, kind of lurking in the background. So the big question, the one we're left with, is this. Can this supercharged momentum actually keep going? Or are we just heading for a massive burnout?